And I give the example of Japan, because when you're looking at the United States, the Japan example I think is a very good example. Japan has total debt to GDP of about 500%, and it has a government debt to GDP of about 270%. So it is way, way, way more leveraged in a sense than the United States is. And so then the question is, as we go through this, the magnitude of monetization. You have to go back to say, who are the buyers of the debt and what are the motivations? There is a greater fool theory. The greater fool theory can go on for a really long time. The timing of when that shift takes place is very much dependent on that. So as we look in terms of, let's say, the United States, certainly it's the case, and then Japan, certainly it's the case that we can't support these kinds of debt. So anybody with a sharp pencil will know that we're not going to be able to support that. That doesn't mean there won't be adequate buying, just like in Japan's case. You can have plenty of buying. You provide enough liquidity, and the question is, what are the choices? So the big shift in terms of going to the notion of what do I do with my money. Let's say you have a lot of liquidity, and the world has lots of liquidity. Today, the world has lots of liquidity. The question is, what are its choices? And what do those choices look like? And then you put your money. So you produce a lot of money around, a lot of liquidity, and then say, do you stop buying U.S. bonds when you have, or do you stop buying Japanese bonds when you have no interest rate and a currency risk? And so when do you stop buying? Well, it's when you have confidence in ultimately when it's driven to something else. At some point, you get a move toward inflation. If there's a move toward, like, I want to hold inflation assets, then you come into problems. Until you don't have that move to move toward inflation assets, you have a capacity for a lot of the buying there, and so the timing. So this could go on for quite a long time, because you have to go back to the buyer and you say, who is that big buyer? We know who the big buyers are of U.S. Treasuries. Okay?
China.
So we know who the big buyers are. And then you know there's, look at their choices. Look at their, their preferences.
Not a lot of alternatives.
So there are all of those. So these are it's not sound finance. And when we talk about our budget, we're also not talking about, the non-liability, the social, the pensions, the other liabilities that exist. We have a lot more promises than we can keep. But the timing of that very much depends. That can go on for a long time. So there's a lot of dynamic between now and a problem, just like Japan can go on for a very